Hello and welcome. I'm Matt McCall. Thanks for joining me here today. It's Tuesday, January 4th, the first show of the new year. We got a big show coming up for you. Apple hit $3 trillion yesterday. $3 trillion. Do you know how much money that is? Well, everybody says, what's going to be the next $1 trillion company? I'm going to talk about which company is going to be the next $500 billion because there's a lot on the precipice. There's a lot of smaller ones that could make it. I got a 6-pack of stocks I'm going to share with you. Also, it's the beginning of the year. Let's talk outlook. Bloomberg went through tons and tons of outlooks. I pulled some amazing things from you. And then there's Byron Wien. For over 30 years, he's putting out surprises for the year. I'm going to go through them. There's some ones in there I agree with. There's some that I don't agree with at all. All this and my outlook for 2022 coming up now on Making Money. Welcome again. Happy New Year, everybody. It is now 2022. My first show of the new year, which it's going to be a really big year. We got a lot of great things in store for you coming up over the next 12 months and beyond. We're going to have some great guests coming on the show. We are going to cover a lot of very important topics, both educational, fun, and of course, making money. And remember, there's always 3 things I try to achieve in these shows. And that is educating you, because there's nothing without education in this world. 2, fun. We have to have fun or it doesn't matter. And then a byproduct of that will be making money. Money doesn't bring happiness, but boy, oh boy, it brings some freedom. And I'll tell you what, it's a lot of fun too. So that's going to be the goal in this show. It's the goal it's always been. But here in 2022, we want to start off on a positive, a very good note. So we can do that by let's just taking a look at the stock market. Let's take a look at this chart. It's the S&P 500. And this morning, folks, it's right here at an all-time high. It's amazing to me when you read outlooks for 2022, when you read recaps of 2021, if you read the headlines any day of the year, it's just so darn negative. People, when I talk about the economy being strong, when I talk about the stock market being strong, do you know what happens to me? I get blasted that I'm not in touch with reality. I'm not an everyday man. Contraire, mon frère. As a matter of fact, the last few weeks I spent at home where I was born and raised and grew up, I'm more of an everyday person than you could ever imagine. It is the most blue-collar little town in Pennsylvania that struggles to get by. That has been my life. So I do know what it's like for the average person. And I'll tell you this. Yes, not everybody's perfect. There are some people struggling, but there's a lot of jobs out there. The economy's strong. Corporations are making money. And of course, the comeback to that is, well, yeah, corporations are making money, but the workers aren't. Wages are increasing dramatically, and they're only going to keep going higher. Sure, inflation puts that down a little bit, but that's going to come in check this year. So, folks, we are in a good place heading into 2022. And just because we had 3 straight years up for the S&P 500, just because we had a year of over 25% gains in the S&P 500 last year, it does not mean it can't continue. And I truly believe at some point this year, I don't know where we end, but we will be up over 20% going forward. Now let's get to Apple. $3 trillion, folks. It hit a valuation of $3 trillion yesterday. Look at this, at about $182 a share. Let me talk about Apple here for a little bit. You know, it's amazing that it did it on the first day of 2022. It's kind of a nice way to kick it off. It's the first public company ever to hit $3 trillion in the United States. So why? Why is Apple so strong? Well, a few reasons in my opinion. Well, iPhones continue to sell and they continue to get better and better. You know, I'm not the kind of person that waits for the upgrade. I wait till my phone's basically doesn't work anymore. It really needs something. But for the most part, I text, I email, I call. I very rarely even call. Macs continue to sell. I have a Mac right here. I will never buy anything but a Mac computer. Music. Apple Music has been doing very well. Apple TV, now they have something that's going against Netflix. Actually, of all the streaming services, I went through at the end of the year all my streaming services: Showtime, HBO, Hulu, Disney Plus, Amazon, Paramount Plus, you name it. I don't have Apple TV, which is bananas. I probably have to get that because it's at this point I might as well just get the last one. And I will say I got Paramount Plus because I want to watch Yellowstone, and it's not even on there, which is the greatest show on TV right now if you're not watching it. And then there's the services. All the services, the App Store, how much money they make off that. And then there's the future. Because people buy stocks not based on where they were or where they are today, but where they're going. For Apple, there's two things. One is the metaverse, which is a big, big topic and will be even bigger in 2022 and beyond. The metaverse, that virtual reality that we're all going to live in if we're not there yet. Their AR, augmented reality headset, comes out 2022 this year. They're already working on version 2 coming out in 2024. That is important. Also, I think we're going to see an Apple car, folks, in the next few years. Most likely autonomous. They're going to be huge. And that's another reason I think that you could see this company be potentially a $5 trillion company by the end of the decade. So let's take a look back at Apple. We'll go all the way back to 2007, January 9th. That's when Steve Jobs first announced the first iPhone. At that point, Apple was worth $81 billion, which sounds like a huge company, especially back then. And it was big. But since that time, the stock is up over 3,640% since the announcement of the iPhone, which most people thought, I don't need an iPhone. Let's jump ahead to 2011, October 5th. Unfortunately, that was the day Steve Jobs passed away from cancer. The company was worth about $340 billion at the time. People said, Steve Jobs, without him, this company's dead. Well, Tim Cook and his team took over. They've done a hell of a job. Stocks up over 750% in that time frame, crushing the S&P 500. So right behind them right now is Microsoft with a $2.5 trillion valuation. We also have Google, Alphabet, let's call it, and Tesla, both over $1 trillion valuation as well. So let's talk about a six-pack of companies. Getting to $1 trillion, there's not many that are lined up, and I've done shows talking about the next $1 trillion company. But let's talk about the next $500 billion, the $500 billion company, because you have to go along the way. And I think there's a lot of companies that are sitting there that could be big winners. These are in no specific order, and I'm not saying these are buy or sell recommendations at all. None of this stuff is. But let's take a look at a couple. The first one we're going to take a look at here, folks, is Pfizer, which is down big the last 2 days, but about a week and a half off an all-time high. So Pfizer's about a $310 billion company. So it's not that far away. To get to where it needs to go now, it needs about a 67% gain, 65% gain from here. Pure and simple, the only reason I put Pfizer on there is that basically they have cornered the COVID market on top of already great pipeline of already approved and pre-approved drugs globally. But they have cornered the COVID market with both the vaccine as well as the antiviral pill. I don't want to get into COVID, but I don't think COVID is going away anytime soon. It's probably going to go the way of the Spanish flu of 1918, which in a few years after that, it became the seasonal flu, which I think this will happen, which means we'll probably see people pushing or getting the COVID vaccine for the foreseeable future. We'll probably have an antiviral pill for COVID, several of them out there. If you do get it and you're high risk, you'll take that pill. So I think Pfizer will continue to profit and benefit from COVID for many, many years, leading it to be a $500 billion company. The next one, we're kind of pivoting here a bit. It's called Next Era Energy, symbol NEE. Right now, it's about a $180 billion company. You can see here in the chart, just off an all-time high. It's a utility. It's Florida Power and Light, which makes about 60% of its revenue. It's got about 5 million customers down in Florida. But it's at a huge growing renewable energy unit with wind, solar, nukes. To me, this is a great place to be, and it's a very lower risk way of playing the boom that is renewable energy during the roaring 2020s. And who knows, I might be a customer of FP&L, Florida Power and Light, very soon. I'm making a bit of a shift in my life, a major shift this week. It's been going on for a little while, but I will be relocating to Florida in 2 days. We'll be setting up a studio and office down there, so we'll have a very nice fresh studio in the future. But it's going to be a slow process, but if anybody sees me walking around Delray Beach or running or biking, wave. That's probably going to be me. So NEE, a $180 billion company, but as renewables continue to take off during this decade, this could easily be a $500 billion company. This is a company that I've been watching for a very long time and was one of the companies I recommended back in 2009 and has been one of the biggest winners of stocks I've ever recommended. And this is Advanced Micro Devices, symbol AMD. It's also about a $180 billion company right now. You know, what I love about this company is it's a chip company, semiconductor, but is in so many of our themes. This just kind of lives in so many of them, whether it be cryptos, whether it be gaming, whether it be the cloud, whether it be data, everything you can imagine they're a part of. It's kind of like a mini NVIDIA, in my opinion. So, and I also love the numbers. You look at 2020, it had about $1.29 earnings per share. 2023, looking for up to $4.05. That's huge growth for a company this size as the demand for chips continues to expand as all of our mega trends expand. I think NVIDIA is still going to be a huge winner, but AMD, I think, will catch up a little bit and become a $500 billion company. That's number 3. Number 4, again, a company that I was onto very, very early on in my career when I had my money management firm, Penn Financial Group. It was actually one of the first companies I've ever bought for clients way back in the day. And split adjusted, I think it was well into the single digits, and now it's at about $354 a share. This is Intuitive Surgical. It's about a $125 billion company. This is robotic surgery, folks. What's fascinating about this is they have what's called a Da Vinci system. They have about 6,500 Da Vinci systems out there right now in 67 different countries. They've performed over 10 million procedures using its robotic surgery. Their market share in robotic surgery is about 80%. So you say to me, Matt, well, they already have 80%. How much more can they get? And they probably have competition coming online. Yes, they do. However, more and more surgical procedures are going to be moving towards robotics. And them being the leaders and one of the first ever to do this, successfully grow this company, they will be the first at the forefront of all the new robotic surgeries. Not saying others can't jump in, but they will continue to grow. This could be a $1 trillion company by the end of the decade. About $125 billion now. I think it's an easy $500 billion company in the next few years. And it's very much like the Razor model, where you get the robot in there, but then you have to be serviced. So you have ongoing fees that the company makes to service and upgrade that robotic surgical device. This one might sound a bit boring to you. It's actually my first job out of college was Charles Schwab. Look at this, though. This company is up over 4% today, folks. I'm showing show you a long-term chart here. At an all-time high. This stock's at a new all-time high. It has a merger with TD Ameritrade that's been going through for a while. It should be finalized this year, where you start seeing all the accounts come together. They're going to continue to grow, in my opinion, by acquisitions, about a $165 billion company. They are going to continue to get to new entrants into this market. You know, my goal with this show are 3 things I mentioned already, and I'm going to mention them every damn show because it's so important. Education, fun, making money, but also getting younger people and people that are older that have not yet invested in a market or are very new or afraid of it, break it down simply for you so you can relate to this and get you in the market. And, you know, a lot of people will go to Robinhood because you can buy small shares, a little bit of money, no fees. But the thing is, you know, Schwab does offer a lot more, much better customer service. Still no fees to open an account, no fees to buy stocks. So I think you're going to see Schwab really take on the new generation that gets into the market. The TD Ameritrade was a great brand. Schwab's a great brand. Now that they're together, great free research they offer to their clients. I think this is a big, big winner as people move away from like the Robinhoods and that of the world into a little bit more established companies that offer better services for still zero trading, zero fees to set it up. I think Schwab will be a big winner and will be a $500 billion company. And one more, kind of rounding out our 6-pack of the next big winners here, is Snowflake. Down big today, down 7%. A lot of the growth stocks are down today. It's about a $100 billion company. So that's a 5X from here. This is a recent IPO. I'll zoom out a little bit here and show you. IPO'd back in 2020, had a big run up, then it fell here in May of 2021, and since come back and rolling over again. So it's been a volatile run for Snowflake. This is a company that stores data, and as more and more data is created through every industry, every person out there is creating data. The companies cannot handle this data, so Snowflake steps in. More importantly, they can analyze that data for them. And this demand is only increasing as people want to use that data to help profit and make money in their company. They use machine learning, artificial intelligence to do it. And a number here that I love. Well, two. One is that their first profit will likely come in the next fiscal year, which is great. Turning a profit. You always want a path to profitability with early stage growth companies. Number two, this is a number that really stood out for me. Net revenue retention rate at 173%. Let me explain that to you. Again, the net revenue retention rate. That means for the customers that they have right now, net revenue, if they didn't bring on any more customers and their customers spent the exact same amount of money as they did last year, it'd be 100%. If they didn't bring on any new customers and they lost half of them, that means it'd only be 50%. That retention rate of net revenue is 50. Theirs is 173%. What that means, folks, is that their customers are actually spending more in the second year. $1.73 for every dollar they spent the year prior. That is a fantastic number. That tells you something about the business model. It tells you that their customers believe that they're getting so much out of the services that Snowflake offers, they're willing to spend more. That is a very big number and one to keep an eye on. All right, so there's my six-pack. Pfizer, NextEra Energy, AMD, Intuitive Surgical, Schwab, and Snowflake. Now let's take a look at some outlooks. I looked at Bloomberg. They take a look at over 500 sources because everybody has an outlook for 2022, including myself. And, I found a few things that were fascinating in this. Number one, the number one topic was inflation. It doesn't surprise me. It was the number one topic seen the most out of all the 500 plus reports that they looked at. Most people expect interest rates to increase. Not a big surprise. And a lot of people believe that the Fed are going to F up again. That they believe the Fed is not going to handle rates right. If they don't, obviously that could not be a good thing for the market. So I hope they do handle it right. And I don't know what that is until the hand's dealt. I likely see 3 interest rate hikes. We'll talk about that more in a little bit. But most people think that they're going to mess it up. And if interest rates do go up, this is not good for bond funds, folks, or bond ETFs. To give you an idea, the TLT, and I'll pull it up here for you. This is the Ishares Barclays 20-plus year Treasury bond ETF. So this is a basket of Treasury bonds that have 20-plus years, 20 or 30 years. You can see here it broke out to a yearly high in December. Since that time, because yields have gone up, look how much it's fallen. It is down about 10%, 9%. If yields continue to go up, you're actually going to lose money in bond funds because the amount you're going to lose is not going to make up for the low interest rate that it's paying. So always keep that in mind. People think bonds are safe, bond funds, bond ETFs. They can get hit too. At rising interest rates, as interest rates go up, bond funds have an inverse reaction, meaning they go down. Please keep that in mind if you're sitting in a lot of bond funds right now, because interest rates likely are going to go up and your bond funds will likely fall. COVID, believe it or not, only had 36 mentions. So, I agree. I would have mentioned it, but I would have mentioned it in a positive way that I think it's going to be a non-event as we get later into the year. China was mentioned twice as much as COVID, mostly negative. I see that as an opportunity. I think China's been beaten down so much. I think a lot of the negative news has been priced in, and I think it will bottom the Chinese stocks during the first quarter of this year, and we'll see great opportunity in some of the mega caps and in some of the small caps. Very little attention was paid to digital assets, cryptos, Bitcoin. Again, I think this is good. It is not yet in the masses, folks. We may think it is, but it's not. Bitcoin's sitting around 47,000 and change right now. Could it go to 30 before it goes to 100? Yes, but I still think it hits 100,000 this year. A lot of attention to ESG, which, as we know, environmental, social, governance, that's a big push right now. So ESG investing, I can see why people are pushing that. Now, there's something that I've been reading for many, many years, and it's been coming out for over 30 years. Byron Wien, who is now the vice chairman of Blackstone, him and one of his colleagues, Joe Zeitel, they put out the top 10 surprises each year. Byron Wien always did it by himself, but he just brought him on. He started his tradition in 1986. I was 10 years old. So I obviously wasn't reading it then, but that's when he was the chief U.S. investment strategist at Morgan Stanley back in the day. And he joined Blackstone in 2009. And in 2018, Zeitel started joining Byron in doing this. And I don't know how Byron is, how old he is now. He's probably in his 80s. Still looks great. Still one of the smartest guys on Wall Street. Love what he has to do. Let's go through his top 10 and I'll comment on it because I think they're just fascinating for those of you that didn't get a chance to see them. So number one is he believes that a combination of strong earnings clashes, what he calls, with rising interest rates will result in no progress in the S&P 500. Basically saying the S&P 500 will be flat. He also believes that there'll be a correction, but it doesn't exceed 20%. So it doesn't get into bull market territory. So I will say, I agree with him that I think there will be a correction. I've actually said I think there's going to be two corrections of over 10% during the year. And there's nothing wrong with that. There's nothing wrong with that at all. Typically, a correction happens about every 12 to 13 months, about once a year. If we have two this year, we haven't had one in over a year. I don't see it as being a big problem at all. Buying opportunities, folks, not times of panic. The S&P making no progress and closing flat, I don't agree with that. I think we're going to close up for the year. Number two, he talks about commodity prices declining, wage and rents continue to rise, that the CPI, the Consumer Price Index, inflation, will increase by about 4.5% this year. Much lower than the 6.8% we saw in December, which was a record. So he thinks it's going to come down a little bit. He says some view the inflation as transitory, but he thinks persistent inflation becomes a dominant theme. I quasi-agree. I think it may be a little bit lower than that, but I quasi-agree with that. The bond market begins to respond to rising inflation tapering by the Fed. So the yield on a 10-year he believes will be 2.75%, and that the Fed will raise interest rates 4 times this year. Let's take a look right now. We'll take a look at the 10-year. The 10-year right now spiked on the first trading day of the year from about 1.52. It's at 1.66% right now, closing in on a multi-month high. So people are freaking out a bit about it going up. Keep in mind, before the pandemic started, folks, which was, I have to actually zoom out even more. It's how long we've been in this damn pandemic, was back here. And we had it around 1.7%. So we're basically back on the yield on the 10-year to where we were before the pandemic happened. In that time frame, the S&P is blown above that level at an all-time high. So the fact that yields are back to where they were is normal. Don't freak out because interest rates are higher than they've been in a while. We're just back to where we were. As far as the Fed raising interest rate 4 times in 2022, I think 3. So we're kind of close there. 4 could spook the market a little bit, but I think 3. Could a 10-year hit 2.75? I don't know if it gets that high, to be honest with you. I think 2.5. Let me go back to that chart real quick. Let's look at 2.75. I'll move this line up to around 2.75. That's where it'd be. We'd be back around at the beginning of 2019. Possible. I think, again, we probably get stuck around 2 for a while, maybe 2.5. 2.75 might be a little bit much for me, but, you know, we'll play it by ear. Number 4, in spite of the Omicron variant, he believes group meetings, convention gatherings return to pre-pandemic levels by the end of the year, and that people will start going to work 3 to 4 times a week, and that we will see people get back to theaters, concerts, sports events. I agree 1,000%, and I hope that's true. Number 5, he talks about China. He thinks the policymakers are going to continue to kind of clamp down on property, the hot property market, which will push people to take the money they're sitting on that's not going in property into the stock market. This creates a major opportunity for asset management firms to flourish in China. I agree. And because of this, I'm going to start doing research, my team and I, on companies that could benefit from more people putting money into stocks in China. And as that asset management, which is still in the very early stages, grows to what it's going to be, what we have in the West right now, I think you see great opportunity in some stocks, whether it be Western firms going in there or local Chinese firms. Great prediction. The price of gold rallies by 20% to a new high. Well, he also goes on to say gold claims its title as a haven for newly minted billionaires, even as cryptocurrencies continue to gain market share. I don't know. You know my view on gold. I don't like it. I would much rather own Bitcoin any day of the year. Then he talks about the price of oil. He believes that it could forecast a rise above $100 per barrel. You know, if the economy really continues to heat up and recovers, and we don't see production increase from OPEC, it is possible. Because even though we're seeing more renewables come online, we're seeing more shale come back online because at higher prices it makes it more financially prudent. I don't know if it's going to be quick enough. So we could see $100. He says the nuke alternative for power generation enters the arena. I love this. I think nuclear power is going to be huge, and I think it's going to be a big thing. This year, early on, there's going to be a decision in the European Union about whether nukes are considered clean energy. They are, folks. They absolutely are. I'm telling you right now. 3 Mile Island, it was fine. Chernobyl was a mess. That's a one-off. That was just the way it was set up. Fukushima was built on the water and had a tsunami. One-off. If things are done right and safety's followed, it's not a big issue, folks. The risk is so much lower than you can imagine. We need this to have clean energy. ESG, I talked about this. He believes that more corporations are push this, which they already are. He believes the federal government may actually come in, the Federal Reserve, I should say, that does stress tests for financial institutions, see their vulnerability to climate change scenarios. I don't know about that far, but I think we'll see more ESG investing. And he believes that we're going to see a shortage in lithium-ion batteries, and it's going to hold back our EV push. Look at the lithium ETF. It's pulled back off a high, but look how strong this has been. I mean, these stocks have done so well as demand for lithium and anything lithium related. And again, that's why I think you need to invest in other battery technology breakthroughs, because that is going to be the only way, folks, the only way that we're going to keep up with demand for electric vehicles. Real quick, he's got 4 what he calls also rans. And these are that didn't quite make it because he doesn't know if they're as probable or just not as relevant. These are the most fun, and these are the ones I like the most. The FDA approves its first ex vivo gene editing treatment, CRISPR. That's what we're talking about, CRISPR. If this gets approved, this was one of my predictions. If this gets approved, it is a game changer. There's 10,000 monogenic diseases right now that have no cures. That means there's one gene off. One. Sickle cell disease can be cured. We've already seen CRISPR come in and cure some people of it. Once this gets approved by the FDA, it is an absolute freaking game changer. You talk about trillion-dollar companies, some of these gene companies could be there in 10 years because of this. Number 2, Jamie Dimon reverses his position of cryptocurrency. He's the head of JP Morgan. He's been anti-cryptos, even though his firm does a lot in cryptos. He reverses it, and they become a major player in the crypto market. Boy, I love this. And I think eventually Jamie Dimon eats crow, and he will have to cow down to the crypto people and say, I'm sorry. He'll never say sorry. He'll make up some BS comment. The US and China both seek to become leaders in the advanced semiconductor industry. Absolutely. And we're going to see the governments of China and US back that with money. The last one I find fascinating. Puerto Rico becomes a new retirement destination of choice for people. Great weather, of course, low taxes, and they put aside their fears of hurricanes. I don't think people stay away there just because of hurricanes, but I agree. My retirement home is being built in Nicaragua right now. I'm moving to Florida. Low taxes, great weather, want to change. Listen, people are getting out of the Northeast. I just had to deal with snow. There's snow out there right now. Great predictions. Thank you, Byron, for doing this for over 30 years. Amazing. So, folks, we talked about a lot. We talked about Apple hitting $1 trillion. We talked about the next 6-pack of stocks that could be $500 billion companies and even more. We talked about some amazing outlooks for 2022. But I'd like to wrap the show up again with just talking about 2022. You know, 2020 we thought was such a hard year, and it was. We put it behind us. 2021, surprise us again by being another tough year for many, many people. I'm not guaranteeing 2022 will be better, but I will say this. There's only one way we can go into this, and that's with a positive attitude. One foot in front of the other, we can make this happen. And I will tell you, hard work, good karma, determination, being nice to people, having fun, educating yourself, it will lead to wealth. We're not all going to be millionaires. We're not all going to have huge portfolios. But I will tell you, that does not lead to happiness. Making a couple bucks in a market, that makes you happy. That's what it's all about. But I will say this. If your goal is to be a 10,000-aire or 100,000-aire or a millionaire or a multimillionaire, we can all do it. I've done it. I've seen people, friends and family do it. It takes time. It takes patience. It takes hard work. But throughout 2022 and beyond, myself, my team, my production team here at Making Money, we're going to be here for you through the ups, through the downs. I cannot wait to see what 2022 has in store for us. It's going to be, like I said, at least we're going to have fun and be educated. And I got to tell you, over time, we're going to make some money. So Happy New Year again. Happy holidays to everybody. Thank you so much for tuning in to the first show of the year. We got many, many more coming at you in the next year and beyond. Thank you so much. Once again, I'm Matt McCall, and this was Making Money.